Good morning, everybody. Thanks for tuning in. I'm Charting Man Dan, filling in for Chart Gal Lori, sending our love her way as she deals with more important life things. She'll be back next week, but in the meantime, we're going to check in on the broader market. I'm going to look at, of course, the cannabis sector, which is getting a lot of attention recently. Going to do my little rundown here as far as what I'm watching for today, and then I will start interacting with you all in the chat room and reading your requests and comments and things like that. So first things first, the S&P 500 and the NASDAQ are breaking the lows of yesterday and seeing a gap down open shaping up. And that's notable for me because it gives me a piece of information because we know that generally speaking, the strongest uptrends see first hourly oversold conditions mark daily higher lows. And so we dropped yesterday to first hourly oversold conditions in SPY and QQQ, and we bounced into the afternoon. Nothing meaningful. But the fact that we're now dropping to lower lows shows me that hourly oversold, at least definitely for the NASDAQ, and we'll see the S&P 500 is going to test first thing. But if we drop to these lower lows, that tells me that this is not the strongest uptrend on the daily time frame. And that tells me that's a little bit of a point in favor of the bears. Right now, as I've been talking about for the last few weeks, the start of September is going to be really key to determine whether or not the S&P 500 gives us a weekly lower high and downtrend into a 3-month equilibrium to start 2024 and a tightening range there, or whether the bulls can take back over and this is a monthly bull flag and a potential cup and handle just under all-time highs. And what we're looking at now in short term is this the weekly lower high being set? If it is, it's possible we tighten up on the weekly for the first half of September. But first things first, the question is this the weekly lower high being set? And now we go to the daily and we look for information and say, okay, we're weak, but it is still a daily uptrend. For SPY, anything over 435 is a daily high or low. But the size of this current retracement, now being 50% plus, is creating the space where next bounce we're going to watch for a potential daily lower high, knowing that if the bears confirm a daily downtrend, the weekly lower high is likely shaping up. So again, that's how these different time frames relate to each other. And that's now what we're watching as the markets take another bit of a leg down here in pre-market. That's now what we're watching into next week. This is the 5-minute time frame, so fresh lows here. And so bears are going to be watching for daily lower highs to be the result of the next bounce in many names. And the S&P 500 is weaker than the NASDAQ overall, but the NASDAQ dropping yesterday because of Apple, and Apple is really getting crushed. Apple yesterday was down 4% at one point, and right now it's down another 3% with a big gap down. So just getting absolutely worked on news of China and, potentially 60 million Chinese government workers are being, forbidden from using Apple. That is essentially a hit to their potential target market. So that's why Apple is, and Apple was a lead bull for QQQ last week, and now it's a lead bear. And that weekly lower high is quickly shaping up on Apple as well. And if Apple were to drop down and break 171.96, that would be a weekly downtrend confirming and a sign of longer term consolidation. So definitely keeping an eye out for that. So it depends on what time frame you're looking at the market as far as what you're looking for. I'm looking for a daily bounce sooner rather than later in the market. I'm looking for daily lower highs in many names to be the result of that bounce, but I know daily bounce isn't going to get going until Apple finds a bottom. Apple is such a major component in SPY and QQQ that Apple has to find a bottom for SPY and QQQ to try and shape up a daily bounce. But for now, heading into today, very simple, the hourly downtrend is our guide. And so with a gap down open on QQQ, even if we do get, and that was jobless claims, thanks for that reminder. So jobless claims the reason for that drop down. But even if we do get a bounce this morning, for QQQ, anything under 375 is just an hourly lower high. So the bell can ring, we can bounce 1% and still be in an hourly downtrend. So the hourly downtrend is our short-term guide, the daily uptrend is our mid-term guide, and the weekly lower high is our potential longer-term outlook. So it's important to keep all of those things organized in your brain so you're not, getting confused as to what you're expecting when. But yesterday my mindset was I'm only looking bearish. Today, I would only be looking bearish after an hourly bounce takes place. Aggressive bulls are going to be looking for an hourly bounce. I don't think I'm going to be an aggressive bull this morning. Maybe a patient bear looking for the hourly lower high. But if I were going to be looking aggressively bullish, I'd be looking at names that have some supports coming up, like Tesla. We'll look at that in just a moment. So just real quick, the points in favor of broader market bears right now as the weekly time frame is potentially setting a lower high. We've got healthcare sector confirming a weekly downtrend and hitting the lowest level in months. We've got the dollar bulls up at the highs. And we've got, those are really the two biggest check marks for the bears in the broader market. And the fact that the S&P 500 is now retracing over 50% of the bounce from last week, creating the space for the daily lower high. Keeping an eye, I've just got trying to cover a short here pre-market. We'll see if that fills. So let's talk cannabis. I know a lot of you here for cannabis because cannabis has been getting attention lately. So MSOS, gap up for selling yesterday, closed at the low of the day. Overnight, we got a headline, safe banking, potentially a priority within the next 6 weeks. Dangling carrot. That dangling carrot has been dangling for years. But after price action like this, after, the news that we've been seeing, the headlines hit a little bit differently. There's a little bit more optimism. And so, we're seeing a little bit of strength overnight. It's very clear to me that, I shorted MSOS yesterday on the gap up, and I chose the wrong name. TLRY was the better short. And right now, TLRY is down pre-market, and MSOS is up maybe 4% or so. And so that's, I'm logging that away in my memory. All right, this is a U.S.-focused story. Keep a mindset of potentially long U.S. and short TLRY. I know they have U.S. exposure, but again, it's hard to argue with the fact that TLRY broke the low of Friday. It's trading near its low of yesterday, first thing. It's a potential hourly bear flag. So that is how I am approaching the sector right now. So, a lot of weakness first thing, big gap downs in some names, but MSOS opening higher. And I'm treating MSOS as an hourly equilibrium, where we've got the high at pre-market, the low of the day, the lower high, 850 is resistance to be watching, double bottom, another resistance at 819, and then a triple bottom. At the end of the day, it's very clear that we've got a base of support at 788. 789 and 788 is a triple bottom. And so that's the line in the sand in the short term. If that level holds, the bulls keep complete control and fend off daily consolidation. If that level breaks, daily consolidation is underway. We zoom out, we scout a daily high or low. But the way I'm approaching things is, I've got the short where I took some profit yesterday. So my stop's at 862. If the high of yesterday breaks, I'm going to stop out and not lose anything. That's my approach with the position that I have remaining open. And the only way that I am interested in any re-entries of my swing longs that I sold yesterday in the 850, 60, 70 range is daily consolidation. I must see daily consolidation if I'm going to look to re-enter swing longs. It's the only way I'm going to be comfortable. If neither of those things are happening, it's just day trades. It's just short-term mindset and patiently waiting. And it's possible with how we are set up right now. One takeaway for the cannabis sector is the cannabis sector, specifically MSOS, is holding on really well considering the broader market has been dropping for days. And again, we got a gap down shaping up in SPY and QQQ right now. And we've been pulling back for the last few days, and that is not slowing down these bulls. So if we fail 850, I'm considering it just another hourly lower high in a continued tightening range, and then we'll have to see how that breaks. And if we break, again, 788 support, we zoom out, we watch for hourly oversold conditions if we get there, and we'll look for the daily high or low from that point. So it's possible the bulls can salvage things here, and we'll know a lot more after the first hour of trading. And again, my focus, it's easy to get overwhelmed looking at so many different individual names in a sector. I would suggest focusing on a few. I would suggest focusing on a low cap name that has higher volatility, higher risk reward. The ETF, of course, just as an overall gauge. And then a bear, if you are a bearish trader, I know many of you are long only, but if you're a bearish trader and open to that direction as well, trying to find the weaker names to be looking bearish on as acting as, any potential hedge. In the sense that, if you have MSOS that you're going to be holding into the election next year, we know MSOS is going to have 20% plus drawdowns along the way. And so if you don't want to just helplessly sit through those, look into short, if you are an active trader with experience, is a way to make those pullbacks a bit less daunting. So, very clear. As far as those levels, one of the leaders, I see a couple of requests, so I'll cover it right now. ARYWF, nope, AYRWF is one of the best performing low cap names. And, I made a tweet recently saying, and now the numbers have changed, in the last 5 days, this name has gone up 200%. And the reason I like trading long more than short in this market is because a bear that shorted the all-time high and covered the all-time low made 98 or 99% over 2 years. And anybody that went long 5 days ago has made twice as much in 1 week as the bear made in 2 years. And so there's just more opportunity long in markets than there is short. It's great to know how to trade both directions, but those statistics, you can't lie with, you can't disregard math like that. It's a very compelling statement. Anyways, this name, you're not looking long at this point. Again, same mindset as MSOS. You have to see daily consolidation to have the risk and reward align for looking for a long entry, a bull entry. And so right now, short-term support is 240 and 220. If the bulls break 265, they keep their full control. After 265, we're looking up at 3 psychological resistance. But again, it's just the hourly uptrend keeping full control at this point. And that volume is pouring in. We're going to watch for a volume climax to potentially help us mark a top. My MSOS short just got covered, 829 to 819. Just a little pre-market trade. And so yeah, bulls in full control, but again, definitely not looking long up here. Risk reward is not worth it. You got to wait for consolidation. I know it's really hard to wait for consolidation when the hype and the momentum is going, but again, it's just risk and reward in terms of aligning yourself. The last thing you want to be doing is buying right before a 20% pullback, because again, this name, when we start daily consolidation, will pull back 20% very easily. We just have to keep reminding ourselves that, because these euphoric emotions, when we see big green numbers, cloud our decision making, which is why laying out our trades in advance before these emotions get kicked into gear is the way to trade. So Tesla and NVDA, Tesla's got a beautiful equilibrium and it's testing support here first thing on the morning. And so we were looking at, we were looking at a 3-day, it's two daily inside bars in a row and a 3-day hourly equilibrium. And I have the potential of stopping out of my swing position with how we're currently positioned. Where if we drop down and break 242, I'm going to exit the swing long that I entered at 214. And that's just because that will be convincing to me that a weekly lower high is shaping up. And that will be a bear break of this long, drawn-out equilibrium. So key resistance on Tesla is now 252.44. And key support that's going to be tested first thing, 245 and 242. And again, that would be a win for the bears if we break 242. So that is my swing trade stop level. NVDA, I'm starting to look, if I'm an aggressive bull, I'm watching NVDA today to try and set up a daily higher low on the gap down open compared to 448. High, low, lower high, and now we're scouting a higher low, anything above 448. We're currently 2.5% above that level in pre-market. And what I would love to see, I have no position in NVDA, I would love to see a higher low, then a lower high, and tighten up into next week, and then look for a break of this clear equilibrium at some point next week. And I will be looking for the potential of a daily lower high bearish entry. I went camping last week for a couple days without internet, and really wanted to play off of 500. And I made an attempt and stopped out right under the high. But that's the way it goes. Wasn't able to pay attention with no internet, so I had to be protective. But NVDA, we're watching for any bounce. Anything under 472 is just an hourly lower high. So again, for today, hourly downtrends are our guides. And we know if we're going to set a daily high or low on a name like NVDA, we need a big hourly bounce. And then we need to confirm an hourly trend change. And so the two ways to go about it would be, let's just say I want a daily high or low on NVDA. A real aggressive bull is going to buy morning weakness and look for that hourly bounce, maybe take a little bit of profit on that bounce, and then try and hold for follow through. A patient bull is going to wait for a big enough hourly bounce and say, okay, that's bulls proving to me that they're putting up a fight. And then I'm going to look for an entry on the hourly high or low and put my stop under the low at that point, and then see if the bulls can confirm the hourly uptrend from there. So that's an aggressive version versus a patient version, both looking for a daily high or low. And that doesn't just apply to NVDA. This applies to anything that I'm looking for a daily high or low on. And there's a lot of names in this market where a daily high or low is the most likely scenario on the current pullback. So, Tesla, NVDA. Another trade that I'm keeping an eye on, and again, this is only for volatility lovers, high risk, high reward. This VFS name, I don't care anything about the fundamentals. It got way overblown. A gap up marked the top. We pulled back every day since. But I'm looking for a higher low compared to 1161. I'm looking for a daily bounce. A very weak daily bounce can result in 40%. A very weak daily bounce can result in 40%, which is why I am interested in this name. And so we're gapping down today. That doesn't mean I'm going to buy, but again, I'm keeping an eye out for signs that a temporary bottom is potentially being shaped up. This is not the kind of high conviction gap down where I'm looking for the bottom to be set. I know it's possible, but we did also gap down last Friday, and that certainly didn't mark the bottom. So this is just a name that I'm watching, and I would not be scaling into this weakness. It has to be a setup where I see a level, I see the bulls bounce off a level, and I say, that's either the low or I'm wrong, and then I put my stop under that level to keep my risk real small. If my risk is 50 cents on this name, and the reward is $4, that's the ideal risk reward kind of setup that you want to put yourself in. So again, this is only for advanced traders that you have, conviction with these kind of plays. And we've seen these kinds of plays many times before. And I'm having deja vu. There's a chart in my memory that's coming up from years ago. And I can't remember which ticker it was, but it did this same thing. And it gave us a nice daily high or low bounce. I want to say it was something in the EV space a couple years ago, but not going to be able to remember it at this point. But just something that I'm keeping an eye on. Again, it's the kind of thing that I'll keep on my screen. And if I can see a low risk setup that I like, maybe I'll take it. But that remains to be seen. Depends on what the broader market is doing and all that good stuff. What time is it? 8:48. All right, we got about 7 minutes here. I'm now reading the chat room. Appreciate the likes and the shares. Thanks for tuning in. Is that I don't even know how to say it. Hakeem Ashi candle? No, I don't have those up. So AMC. AMC is another one. The big difference with AMC is it's Black Dirt Breakdown, all-time lows. Trademarked that statement. Feel free to use it and spread it. Black Dirt Breakdown. So free fall, no support. Fell right through support yesterday. It will have a big bounce. Again, a big bounce being a weak bounce of 40% is on the table at some point. The big question is at what point? It's very hard to time the bottom on something like this. If I'm looking at playing a bounce on a name like this, I'll give myself one try. All right, I'll risk a half-day maker. If I see a level that's trying to hold as support, I can put my stop under it. I'm risking half a day loser. If I'm right, it could be a day and a half maker where, the reward is much more than the risk. But scaling into a name like VFS or AMC is a recipe for disaster, to put yourself in a position where you lose control of the trade. You do not want to do that. And many times I will scale in. Many times in my trading career, I will scale in to weakness and play extreme oversold bounces. But I'm doing that less and less. And it's only in high conviction that I'll do that now. Where, if you're in a monthly, weekly, daily uptrend and I'm playing a back burner, I'll scale in a couple entries into weakness. But if you're in free fall, if you're at all-time lows, if you're in a downtrend on all time frames, I'm finding more and more that I would much rather have a support level to play off of versus that scaling in mindset. And again, it's just keeping the risk real small when playing counter trend to such a magnified move down. So AMC is likely to see an hourly bounce at some point today, and we know the most likely scenario is an hourly lower high with tons of space for that to form. Bitcoin, not much going on. We're hovering just above support. Bulls are not proving a thing. The crypto stocks they did set daily higher lows yesterday. They've been showing a little bit of relative strength. They had some positive headlines for themselves with accounting things, but Bitcoin hasn't done a thing for the bulls in over a week. And so as long as that's the case, these crypto stocks are not going to see any follow through. And so a simple statement for me is I need Bitcoin over 26.2 thousand, which is a double top over the last week, if anything is going to change. And if that doesn't change, then the bears keep their complete control. So simple statement, if 26.2 is resistance, Bitcoin bears have nothing to worry about. Do I see the S&P 500 as a head and shoulders? Possible, yeah, the weekly. Meh, it's not. There's no left shoulder on the weekly. Remember, a head and shoulders is just an uptrend changing to a downtrend. And so, I don't care about a head and shoulders pattern here. I know I'm scouting a weekly lower high. I'm just care, can we confirm a weekly downtrend? It's the same concept, but it just doesn't have the pattern name. Just remember that inverse head and shoulders and head and shoulders is just a trend change. It's just a version of how a trend changes. So, I don't really care about the look, the shape of the pattern. I care about the price trends. And so, yes, we're watching for the possibility that bears shape up a weekly downtrend. That's what we've been watching for the last few weeks. Never a bad idea to take profit on a name that's run over 200%. AYR. And again, partial profit taking. You sell a little bit. If it keeps going up, great. If it pulls back, you got cash to reload cheaper. Great. Shop. So Shop has daily consolidation underway. I will make the statement, as long as 63.28 holds, it's a potential daily bull flag. So that's a key level. We are gapping down with the market weakness here. If I am looking to be an aggressive bull today in anything, I want to see the weaker the open, the better. As weak an open as possible to try and see a gap down into a bounce. First thing. With, again, keeping in mind the hourly downtrend is our guide. But Shop with the gap down open, hourly resistance is 65.96. Anything under that is just a lower high on a bounce. And the next support, again, it's that 63.28 level, which would be ideal for the bulls to hold. If we lose that level, we have a gap fill with a lack of support, and a potential weekly lower high will be shaping up. So the last 2 days, the bears are definitely making a bit of a statement, led by Apple, convincingly Apple to the downside. And so that, again, is shifting the probability. 3-month lower high or monthly cup and handle. It's such a stark difference of the two paths that we are headed down into the end of this year in the broader market. And, that's going to influence the cannabis sector as well. That's going to have a significant impact. So it's important to be keeping an eye on for everything. But the last couple of days, the bears have shifted their probability needle a bit more in their favor. And it's going to definitely be anybody's game as far as what we're looking at next week for the bears to try and confirm daily downtrends. That's really the next question for me is next daily bounce. What's the bounce retracement? And do bears confirm that downtrend? Which then makes that weekly lower high very convincing. What seems to be holding TLRY back? The fact that it just ran massively. Again, markets, they breathe. And so if you go up in a week's time 53%, you're going to pull back. There's going to be consolidation. It's supply and demand. TLRY bounced 100% in the last couple of months. So we can't forget that. You're definitely going to see profit taking on something that's in a prolonged downtrend. Look at the monthly chart. You know, the monthly is battling monthly EMA 12 resistance, which has rejected the price multiple times in the last couple of years. We rejected back here, we rejected back here, and we're testing it this month. All right, I gotta bail here as we've got Chart Gal Dinsey going live for Chart Guys members here in just a moment. Going to do a Cannabis Spaces Twitter on Twitter Spaces tomorrow at 2 p.m. Eastern. Gonna go be on Scott Melker's YouTube channel here in 30 minutes. Wolf of All Streets. And that's that. Appreciate you tuning in. Lori will be back next week. Still sending love her way. Definitely still watching psychedelic stocks. Thanks again.